That's right. We have a very big day tomorrow. We have the CPI reading coming out for November. The CPI reading stands for Consumer Price Index, and it's a measurement of inflation in the economy. Now, back in October, the reading was 7.7%. So that's kind of the benchmark that we're going against, 7.7%. And there's predictions now. There's actual estimates from JPMorgan, from their trading desk, that if CPI comes out at 6.9% tomorrow, the stock market will rally by 10%. At least 8 to 10% is what they say. A huge prediction, but they also give us more data than that. In this article, they give an entire statistical breakdown of the different likely readings, the probabilities of them, and then what they believe the market will trade in response. So we're going to go through this breakdown and try to see what we think is going to happen in tomorrow's CPI. So let's go ahead and start off with this bold claim from JPMorgan here. This article just came out like an hour ago. JPMorgan's trading desk sees the S&P 500 rallying up to 10% on soft inflation data. Now, to kick this off, the main argument here is that JPMorgan is saying investors have positioned their portfolios recently over the past year to be super defensive. They've gone into the big dividend-paying companies, the big value stocks, the low multiple stocks. They're not doing anything aggressive right now. And that's the setup. That's the setup for this inflation reading. And I totally agree with this. In my personal experience, I've seen more interest in dividend-paying stocks, in value companies, in low multiple companies this year than any year of me doing YouTube. Most of the time throughout my channel's history, I'm having to go out of my way to explain how great dividend-paying stocks are. But this year, I'm having to do the same thing for growth stocks. People don't want to invest in growth. They want to invest in value. Deep value, low multiple, dividend-paying, slow-growing companies. And even to that point, we have articles like this. Investors are losing faith in Cathie Wood's ARK Innovation ETF. Cathie Wood has a very aggressive investment style where she invests in companies that have their profits far out in the future. And again, they're even starting to lose faith in Cathie Wood. They're having withdrawals. Assets under management are going down over time, both because their fund has been performing poorly, but also because investors have been bailing on these type of companies. So that's the setup right now. Investors are positioning very defensively, which creates a setup where if the economy starts to move back into a place where growth can happen and interest rates can go lower, then that creates a very good setup for growth companies. They say, quote, a soft reading in Tuesday's consumer price index could spark a powerful rally, with the S&P 500 jumping as much as 10%. That's a bold forecast from JPMorgan Chase and their trading desk. They say in a scenario analysis that maps out the game plan for clients, the team, including Andrew Tyler, suggested an annualized inflation print of 6.9% or lower has a potential to lift the equity benchmark between 8 to 10%. Such a move would extend the index's surge from its October low well past 20%, making a technical end to the 12-month bear market. So according to these analysts, JPMorgan, they say tomorrow has the potential to literally end the bear market. We're back into a bull market if we have this scenario play out. What they do is actually highlight the scenario here, and I think this is very interesting. This is a scenario analysis by JPMorgan's trading desk. We have right here the November CPI reading, and this is all the possible readings they have at the low end, 6.9%, and at the high end, 7.8%. For context here, the benchmark that we're going against from last month or from October is 7.7%. So if October was 7.7%, we want inflation to come down well below 7.7%. If it goes higher than 7.7%, then we're in trouble. That means inflation is not coming down. In fact, it's reaccelerating. In that scenario of it being, let's say, 7.8% or higher, they give that a 5% probability, and they say that if this happens, the S&P 500 will drop up to 5%. So if we get this bad reading of higher inflation, we're down 4.5% to 5%. Now they again give this a 5% probability. Here we are with the 7.5 to 7.7%. If we get one that's kind of in line with October, that means that inflation is really not improving at all. It's just holding high. And although that's not terrible, it's just holding still for 1 month, that's not what investors want to see. They want to see inflation come down. So in this case of it being 7.5% to 7.7%, sort of the same range it was the month prior, they give that a 25% probability, so there is a high likelihood of that. That would actually cause the S&P 500 to go down 2.5% to 3.5% based on their estimates. And for the most part, again, I agree with this. I think if we don't see improvement in inflation, stock market's going to drop. Growth companies are going to sell off. Companies like Netflix and Amazon and you name it, Tesla, any growth company, I think they'll come down 3.5%, 4%. I could easily see that happening. Now, again, they give the probability here a 25% chance. Now, moving one more notch down on this, the one that they give the highest probability, a 50% probability, is the range of 7.2 to 7.4. That's probably where it's going to land in. That would be good. That would be a good thing. And investors would react to that positively. By their analysis, the S&P 500 reaction would be up 2 to 3% on the day. If it goes lower than that, 7 to 7.2, they give that a 15% chance. We're up 4 to 5%. That's an incredibly good day. And then in the very small chance of it going down to 6.9%, which they give a 5% probability, they think it will be an 8 to 10% green day. So unlikely, 5% for inflation to drop that much, but a massive day if that's the case. So I think this table does a really good job of giving different probabilities and then laying out the outcomes of those probabilities. And I think this is probably mostly accurate. It seems accurate in my opinion. If inflation comes down moderately, we'll see a moderate rally in the market. If inflation's higher than expected, we're going to see some downside. So it's nothing extreme here, but this gives us a natural mathematical way of looking at it. And you can gauge your own exposure to the market and exposure to different companies and different investments based off of this. If your opinion is that inflation is going to be on the high end, up above 7.7%, you probably want to be not invested in growth companies, not invested in high beta companies, and have some money in cash because you're likely going to see more downside. But if you're in the camp where you think inflation is going to come down either moderately or more than expected, you probably want to be 100% exposed to the market because there's a lot of upside if that's the case. Now, in my opinion, I've been trying to look at a lot of different interviews and gauge where inflation is at because it has a huge impact on my companies. And from what I can see, I think inflation's coming down. That's my opinion. I'm not sure how fast, but I think it's coming down. And the reason why is I look at interviews like this from the CEO of Costco. He spoke about inflation just a couple days ago, and listen to what he has to say on the subject.
There's a couple ways to look at that. I don't know we're past the worst. I believe we are. I felt that we are for the last 2 or 3 months.
He thinks we're past the worst, but he can't say for sure. Of course, he's never going to come out and say, I know for sure that we're past the worst for inflation. But this is the CEO of Costco. What other company would have a better pulse on inflation and prices of overall goods that consumers use? I think he'd be at the very top of the list of someone that would have a very good sense of this. And listen to him break down the differences in inflation now compared to just a couple months ago.
Because at some point when you start to see container costs coming from Asia, I think in non-food, the container costs are starting to bring prices down because transportation is starting to come down. There's still a shortage of things like eggs. I don't see the egg market deflating at the moment.
So container costs, he says they've come down. I think that's an understatement. They were at one point like $20,000 to get a container from China to here, and now it's down to $2,000 to $4,000. So they have come down dramatically. Container costs were out of control. But he brings up other things like eggs, which still have not come down in price.
Well, there goes my breakfast, Craig. Thank you. Appreciate it.
So I think there'll be some consumables there may be a problem, but I think overall you'll start to see some decrease in deflation, I should say.
That's his short take on the subject, but he thinks it's going to come down. And then just a couple days ago, we have the CEO of Walmart's opinion on inflation as well.
For categories, fresh food is more volatile. It fluctuates more. So today's beef prices are down. Chicken prices are still high, for example. Produce prices are relatively low relative to what they were before. Dry grocery, processed foods and consumables are where the inflation's most stubborn. Double-digit inflation rates have been around for a while, and it looks to us like they're going to be with us for a while. And so that's a primary area of focus for us, trying to come up with creative ways with our suppliers to get prices down. Customers choose private brands in those environments more often, for example. And then there's general merchandise. And in toys, sporting goods, apparel, categories like that, prices have come down more aggressively. We're still inflated, but we're not inflated nearly as much as we are in the other categories.
Now, his this is a little bit more mixed, but he's saying it's either stubborn, staying at around the same place it was before, or it's coming down. And I view this again overall positively. What they're not saying is that inflation is still out of control, and we see strong inflation across the board, and it's something we're really concerned about. Most of the CEOs of these big companies that sell lots of products to lots of consumers are saying that they're seeing it start to ease up. Some things are more stubborn than others. Some things are coming down in price. So if I have to give my prediction, and again, this is just a bit of guessing, I don't know for sure, I could be wrong on this, but I think it's going to be around 7.4%. That's going to be my guess. So we'll see what happens. I'd be happy if that was the case and inflation came down at a moderate pace. And if not, if it's a high reading and inflation is still higher than expected, that would be a bummer. My stocks won't do well, but in that case, I'm in a fine situation because I have no pressure with these. I can hold on to them for a long period of time. I don't need this money. I can let it sit here. I strongly believe that over time, inflation will eventually come down, even if it's not this month. But that's my thoughts so far. I hope this video was a little bit informative of what we're going into tomorrow. Let me know what you think, and I'll see you in the next one.